Let's dive into something truly electrifying today. In the hyper-competitive world of electric vehicles, a name that's rapidly rising is Leapmotor.
Right. A Chinese EV startup.
Exactly. And they're making significant waves. Their global expansion strategy is, well, it's nothing short of audacious.
It really is.
Our mission today is to cut through the noise, look at recent market analysis, financial reports, news, all that stuff surrounding their product launches, and give you a crystal clear understanding of Leapmotor's financial health, their partnerships, product innovations, as they charge onto the international stage.
And what's truly fascinating here, I think, is seeing how a company, pretty new really, in such an intensely competitive landscape, how they're positioning themselves.
Yeah.
Not just for survival, but for, well, rapid international scale and profitability. This deep dive should help us understand not just the what behind their moves, but maybe more importantly, the why it matters.
Okay, let's start with their trajectory then, because the numbers themselves, they're just screaming growth.
Yeah, they really are.
Leapmotor's August 2025 EV deliveries. They hit 57,066 units. Now, that's not just, a good month.
No, not at all.
It's an 88% year-on-year surge. 88%. And 13.8% up just from July.
Impressive figures.
When you see numbers like that, especially with so many players out there,
Yeah.
you have to ask,
Yeah.
how? How are they doing it?
Those numbers are definitely eye-catching. They paint a picture of real momentum.
Right.
And to put it in perspective, they delivered 221,664 vehicles in the first half of 2025 alone.
Wow.
And they've got this really ambitious 2025 sales target, 500,000 units.
500,000.
Yeah. So Leapmotor is rapidly positioning itself as a leader among the Chinese new energy vehicle startups, the NEVs.
So this isn't just luck or random growth.
No. It indicates a very carefully calibrated strategy designed for significant market penetration. We're talking about a company that's quickly catching up to some established domestic rivals, maybe even surpassing them in raw delivery volume sometimes.
Yeah, and it's not just about the number of cars, right?
Yeah.
The financial side looks equally strong. Their revenue surged 92% in 2024. Then it just exploded, a 187.1% increase in Q1 2025.
That's staggering growth.
And maybe even more compelling is the gross profit margin expansion. Went from 8.4% up to a pretty solid 14.9%.
Right.
In an industry like EVs, super capital intensive, how does a relatively new player get that kind of growth and improve margins at the same time? Is it just scale, or is there something else?
That's a really crucial question because margin expansion during a heavy growth phase like this, it's often counterintuitive.
Yeah.
And this financial improvement seems to connect directly to a very specific strategy, vertical integration. But they're quite specific about it. They're focusing on in-house battery pack production. They have a subsidiary, Lingxiao Energy, that does this.
Okay, so they make their own batteries.
Well, not quite the cells themselves. They source the actual battery cells from a giant like CATL.
Got it.
But by assembling the packs in-house, they gain significant control over cost, quality, design, flexibility. It's a kind of hybrid approach.
That sounds smart. They avoid the massive R&D cost of cell manufacturing, but still get control.
Exactly. It gives them a distinct competitive edge, optimizes costs without overextending. We see other successful EV makers doing similar things. It's about finding that sweet spot.
Okay, so they've got this internal strength, this cost control. How are they translating that into a real global presence? Because going international is usually a huge hurdle for newer companies.
Absolutely. And this is where strategic alliances become, well, critical.
Right, the partnerships.
And the biggest one, the real game changer, seems to be the alliance with Stellantis.
Okay, tell us about that.
So they've formed a joint venture, Leapmotor International. Stellantis holds a 51% stake.
So Stellantis is the majority owner of the international arm.
Correct. And this isn't just a simple distribution deal, it's co-ownership. It fundamentally de-risks Leapmotor's entry into Europe.
How so?
Well, first, it allows European production. They can build their TO3 model right at Stellantis' plant in Tychy, Poland.
Okay, local production, big advantage.
Huge. But maybe even bigger is leveraging Stellantis' vast established European network. Sales, service, financing, everything.
So they get instant scale and infrastructure.
Precisely. It lets Leapmotor scale fast, build customer trust quickly, and crucially, undercut competitors like Tesla and maybe even BMW in that crowded C-segment SUV market. They can offer good value plus robust local support from day one.
It's like combining Leapmotor's agility with Stellantis' market muscle.
Exactly. Smart synergy.
And they haven't just stopped with Stellantis, have they? There's another alliance, with SunCar Technology Group,
That's right.
an AI-powered auto insurance provider. That seems like an interesting choice. How does that fit in?
It's actually quite clever. It's about creating a seamless ownership experience, which is becoming really important for EV buyers, you know?
Okay, like making insurance easier.
Exactly. Think about it. Instead of the usual hassle after a minor accident paperwork, phone calls.
Yeah.
Imagine your Leapmotor system, using SunCar's AI, detects the damage, initiates the claim, maybe even schedules repairs with approved shops, all from the car's screen.
Wow, okay, that would be different.
It simplifies a major pain point, builds loyalty, and turns insurance from just a necessity into something that actually enhances the brand. It embeds SunCar right into the Leapmotor ecosystem.
The very user-centric, as you said. Okay, these partnerships lay a strong foundation, but what about the cars themselves? What are they actually bringing to market? We saw them at IA Mobility 2025, right? Unveiled the B05 hatchback, launched the B10 SUV in Europe.
Yeah, and what's really significant there is the common platform. Both models are built on their LEP 3.5 architecture.
LEP 3.5.
Right. It's not just a platform. It's designed to be modular, scalable. That means faster development, cost efficiency across different models.
Makes sense.
And these vehicles, they're clearly designed with an emphasis on, yes, performance, but also affordability and cutting-edge features. Think AI-driven infotainment, smart cabin stuff.
Aimed at younger buyers, maybe.
Yeah.
Tech-savvy ones.
Seems like it. Attracting that next generation of EV buyers who want value and the latest tech.
And for the B10 SUV specifically, you mentioned the price before. What were the details again?
Priced at 29,900 brand, which is very competitive for Europe.
Definitely. And the range.
Pretty substantial, between 361 and 434 kilometers, depending on the spec.
That price point feels really aggressive for the European C-segment SUV market.
It absolutely is aggressive, and that's very deliberate. That segment, CSUV, is projected to grow massively, something like 15% annually through 2030.
Huge potential.
Huge. And Leapmotor's ability to hit that 29,900 price with that range, it comes back to that vertical integration we talked about.
Yeah, in-house battery packs.
Exactly. It gives them a significant cost advantage. In Europe, with tough emissions rules and supply chain worries, having that cost control and flexibility is critical. It makes the B10 potentially quite disruptive.
Okay, so they're not just dipping a toe in. This is a full-on global charge.
Yeah.
You mentioned the numbers earlier. By early 2025, over 30 international markets, 600-plus sales and service sites, planning over 700 by year-end.
Yeah, the expansion is rapid, almost dizzying, like you said.
What's the strategy behind moving that fast globally?
Well, it looks multifaceted. They started by targeting the G10 countries, industrialized nations, plus key importer markets in Europe.
But not just going it alone.
Definitely not. Those alliances with big regional players, Gowan Auto, Emil Frey Group, SFA Automotive, they've been key to accelerating entry into places like Central Europe, Ireland, Bulgaria.
So they tap into existing networks.
Right. Immediate access to distribution, local sales teams, after-sales service. It lets Leapmotor scale quickly without building everything from scratch, which is usually the biggest barrier. It's smart leverage.
And it's not just Europe, right? You mentioned diversification. Plans for India, Middle East, Africa, South America from late 2024.
Correct. And that multi-continent play is really important strategically.
Why is that? Hedging bets.
Partly, yeah. Mitigating regional risks. If things get super tough in Europe or regulations change unexpectedly.
They have other options.
Exactly. But it's also about tapping into high-growth markets, places where EV adoption is maybe just starting but set to accelerate fast.
Like India.
India's a great example. Its EV market is expected to grow at, a 25% CAGR through 2030?
Wow.
These markets often have less entrenched competition, huge consumer bases, and Leapmotor's model, cost-effective, tech-rich cars, seems particularly well-suited. They're building a global presence, not just focusing on one region.
Okay, let's pivot slightly to the financials again.
Yeah.
Because sales growth, rapid expansion, that's all great. But the balance sheet often tells a more complex story. We see this fast growth, but also a Q3 2025 operating loss. 3.17 billion, that sounds like a big number.
It is a significant number.
It reveals that classic trade-off, doesn't it? How should we interpret that loss?
It's definitely that classic startup dilemma, growth versus profitability. That operating loss, while it looks big, it mostly reflects heavy reinvestment.
So spending money to make money, essentially.
Pretty much. It's a deliberate strategy. They're pouring capital into R&D for future cars, scaling up manufacturing, funding big marketing campaigns to build the brand in new places, setting up logistics.
Okay.
It shows they're prioritizing market capture long-term position over making a profit right now, common for ambitious disruptors.
But can they afford it?
That's the key question. And crucially, they seem to balance the spending with strong liquidity. They reported a net cash position of 20.72 billion.
Okay, so they have cash reserves.
A significant amount. It's a robust liquidity buffer, kind of a war chest. It gives them the financial muscle to sustain this aggressive expansion and absorb these initial losses while they get established. Investors will be watching closely to see if the spend pays off in market share down the line.
But even with cash, there are always risks with this kind of rapid, complex expansion.
Always.
One thing that jumps out is that reliance on Stellantis for Europe, production, distribution. What are the vulnerabilities there?
Absolutely. That partnership, while it's a huge boost, it also creates a concentration risk, a single point of potential failure almost.
Right.
If anything disrupts that relationship, strategic disagreements, political issues, even just internal problems at Stellantis, it could seriously delay things for Leapmotor in Europe, drive up costs.
Where worse?
Potentially, that's a big what if. And second, the competition in Europe is just fierce.
Yeah, VW, Tesla.
Exactly. Established players with deep brand loyalty, huge local manufacturing, sophisticated supply chains, often their own charging networks.
So how does Leapmotor stand out beyond just price?
That's the critical question. How do they maintain cost advantages and build a strong brand presence against such well-resourced competitors? Plus, you have potential geopolitical factors,
Right.
brand perception challenges for a new Chinese brand.
Lots of hurdles.
Definitely. Supply chain vulnerabilities beyond batteries, too. Critical components, minerals. It's complex.
So wrapping this up, Leapmotor's expansion, the partnerships, the products, it paints a picture of a really formidable new contender. They seem to be carving out a global niche.
They certainly seem determined, but it does raise that important long-term question for us, and maybe for you listening. Will this impressive liquidity, this clever vertical integration, will it actually be enough?
Enough to navigate the intense global competition, the unpredictable regulations, the geopolitics.
Exactly. Can they turn this early market capture into sustained long-term profit and build a truly resonant global brand? That's the strategic chess match we'll all be watching.
Well, we hope this deep dive helps you connect some of those dots on Leapmotor's really ambitious play in the global EV market. We've touched on their growth, partnerships, products. It's definitely a fascinating story unfolding right now.
Yeah, and if you step back and look at the bigger picture, Leapmotor's journey really offers a compelling case study. It shows how these new, agile players are trying to disrupt massive, established industries on a global scale, pushing boundaries.
Thank you so much for joining us for this deep dive today. If you found this discussion insightful and you want to stay informed on the cutting edge of global trends like this, be sure to follow our channel. That way you won't miss our next deep dive.